All right, how many sessions are there? You guys, if you want to post them up, fine. If not, I'll just burn through them. Asian, London, and U.S. Everybody knows that. Okay, another question that should be on here. What is the timeline for the psychological support and resistance zones? Like, how long is it and when is it? I got to word that question better, but the answer is it's the first 2 bars of from the market open on Sunday, first 8 hours, first 2 4-hour bars. Okay, cool. All right, it's the Asian, this is known as the Asian session of the week. That should be a question. First 8 hours of the week, first 2 4-hour bars. Okay, Rob? It's first 8 hours. The dealer sets the spread for the week and then exploits those levels. All right. It's important. He goes, okay, 8 hours. No, it's important. What session is known for the accumulation of retail trader contracts? Asian. Okay. First part of the cycle is known for accumulation. Is that always the case? Of course not. But understand that, as a general rule, the dealer doesn't move much during Asia because he's setting the beginning of the cycle to collect contracts, analyze the spread, check his book, and then make the punishing move. What is the IHOD and ILOD? That's a laydown. The initial high of the day, initial low of the day, the dealer sets the spread and trades in a circular motion in between those levels. What sessions are the above formed during? Easy, Asian. Okay? What is the ideal size of the market maker spread? The Asian range or channel, or you Craig converts the Tokyo channel, it is 50 pips or less. Okay, 52 is tradable. If it's blown out much more than that, 65, 70, it's going to be more difficult to see a visible stop hunt. That's where you get one leg in, one leg out. What is gap time? I don't know if I covered that in detail tonight, but it's on the slate for tonight, but it is the period at the end of the trading session where one dealer passes instructions to the next dealer. That's where I talked about the end of the session. The guy comes in, he goes, all right, what do you got? He goes, I got 500 million trap long, 100 million trap short, hit the stops, move, blah, blah, blah. That's the change of information from one desk to the next where they pass it off. And it's also known as a dead period between sessions. The market maker may or may not trade during that time. When is gap time? Important. Summer hours. The clock we're on now. GMT -4. 8 to 8:30 during the Asian session, but he doesn't really talk to anybody. He's the first market maker of the day, but he gets his orders. Comes in, sets up for the day. London, Asian London, 3:30 to 4. 9 to 9:30. What trade sits up in the gap time? Brinks. What is an outside structure? A spike candle or a set of spike candles that form the high or low where the next set of candles immediately trade off of the level. How long will the dealer work the price levels or a price level? 30 to 90 minutes, but up to 2 hours. 2 hours is better. 90 minutes is really good. 30 minutes, you got to count for the railroad tracks. 45 minutes for the evening star, the extra formation in there. Okay? How many pushes will the dealer use to trigger the stop loss levels? How many swipes will the dealer take? Pushes infringes on the DMR's copyrights. 3. All right? So I need to change that to swipes. All right, what happened? There we go. What is a peak formation high or a peak formation low? The beginning of the dealer's trend cycle. The stop hunt that leads to the reversal. No, I'm kidding, man. About the DMR. How many trade levels are there? 3. Okay, you should be able to recite the cycle by now. Asian range consolidation, 50 pips or less. The dealer makes 3 swipes at the high or low. Let's say the high. He hits the high, forms the M. Hits the stops, pulls back, shifts the zone off of the high or low, off the high. Hit the stops, drop. Hit the stops, drop. Hit the stops to the downside, unidirectional pins. The pins will point in the direction of the trap. Pull back 25 to 50 pips into consolidation to end the day. That's the cycle. Okay? You should say that in the shower to yourself. What are the 2 dealer trend cycles? All right, uptrend, W, anchor, V1, V2, M, reversal. Downtrend, M, I don't know what happened there, the comma got messed up. M, A1, A2, W. All right? I don't know what happened to my wife. She's sleeping on the job over here. I don't know what's going on with that. I got to fix that for you guys. It's bad. What is the best chart to view the trading levels collectively as a group? The 1 hour. Get used to identifying the levels on the 1 hour because it takes a lot of the noise out, but it's not too far away from the action that you still can see some stuff, all right? You want to keep a chart that's close to the action time-wise, 15-minute, 1 hour. But you also want to be able to see what's going on in the individual stop hunts and rises of price action. And the 1 hour seems to give that collectively. A lot of people would agree. If you see it on a better chart, no worries. Use a better chart. Use a 4-hour chart. Okay, what are the condiments associated with the EMAs? That's an important one. Mustard, ketchup, mayonnaise, water, blueberries. We still haven't come up with a better one for the blue. But if you do, let me know. We're using blueberries. We've been using that for, I don't know, it just started and we never got off of it. What is the recommended time stop? 2 hours. Okay? If you caught second leg and the dealer has not shifted the zone within 2 hours, something's up. His book's not balanced. There might be some contracts building somewhere else. He might hold the level till the next session and then hit the stops again because he's handling a cross. Keep that in mind. Okay? If you take a first leg trade and you start your timer and the dealer issues a second leg, you reset your time clock. Okay? 2 hours. Not negotiable, not 2 hours and 15 minutes. Not let me see what happens with one more candle. 2 hours. What's the reason to initiate the recommended manual stop? What do you mean, Steve? You didn't recommend a manual stop. I've been recommending a manual stop since this started. The manual stop is if the dealer comes back and takes the level. Okay? If the dealer comes back and takes the high, analyze, stop yourself out before you give up the full 23. The dealer comes back and takes the low after you've made an entry, analyze, take yourself out. Don't give them the full boat. Okay? The dealer comes back to extend the high or low against your bias or against your entry. That's when you initiate a manual stop. Dick Schmidt is the master of that. He has found a way to keep his losses 10 or less, and when he nails one, he nails it for 40, 50 pips. And he could have a bad batting record. He can go 1 for 3 or 2 for 4 and end the day in profit. All right? What is the distance in pips for a move to break even? Talked about it last night. 32. More good trades are damaged by moving the stop loss too early into the trading zone. Okay? Now, if you're right in your assessment, the stop loss will take care of itself. You don't have to panic. You don't have to hurry up and move it up. If you make the right assessment, you caught second leg, you got in the trade, they shifted the zone, you're up 25 pips or so, you do not have to panic. You simply need to move the stop loss level calmly into the zone when it's up 32 pips, and then trail by 32 if you want, if you can't monitor the trade. Okay? If you can't monitor the trade, trail by 32, you'll hit your 50, and worst case scenario, you'll end up with plus 12 if it just misses your 50 and it retraces back. You'll end up with a positive trade. Instead of being up 48, miss your take profit, and then it drifts back and you take a minus 23. That is an absolute crime. That's a 50 pip swing against you, and you allowed that to happen. All right? If you're up 48 and you take a 32 pip loss, or I'm sorry, a 23 pip loss, shame on you. That's being a little too overconfident. All right? The way that we talked about stops yesterday, just make sure you understand. Trail by, move to break even at 32, trail by 32, whatever works. If you set your trailing stop to 32 pips, when you're up 32, it'll adjust to break even. All right? Where's the hard stop placed and why? 7 to 10 pips above the high or low on second leg entries. A lazy stop is 23 pips above the first leg if you take the first leg, all right? You've got to use a deeper stop if you're taking V's and A tops or first leg setups. You have to. Because you are in the market, you don't know yet if the dealer's going to make the second pass. There's no way to know until he does it. Steve, will the dealer make a second pass on Euro? I don't know. I'll let you know around 4:30, 5 o'clock when he makes his second pass towards the price. That's the only way to know. The question's always asked, Steve, how do you know if it's going to be a second leg trade? Man, I have no idea. But I've learned enough times and gotten burned for big money by taking first leg trades. When that happens to you, you'll be like, all right, how many more times do I have to bang my head against the wall? Right? The definition of insanity, doing the same thing over and over and expecting it to work. How many times do you have to do it before you realize, all right, the goal here is to make money. The goal here is to ramp up my lot size. I can't handle a 25 contract stop. So the smart thing to do is when the dealer issues the second leg, 99% of the time he ain't coming back, baby. Once in a while he'll make the third hit. That's a calculated chance or risk you have to take. You can live with that. But getting in on first leg, the dealer makes a lot of second legs. Okay? So if you know the dealer makes a lot of second legs, why not hang out for the second leg? And then when he presents that second leg to you, you know that you got him. Okay? This is stuff that I could give you the information, but everyone disseminates it differently. That's why there's such an array of success. There's some guys making $1,000 a week. There's some guys making $1,000 a minute. That's the difference, is the internal discipline of the person. I don't know how to fix that. I wish I can. We brought in the batting coach. We talked about the marshmallow study. Kim brought in these psychological things to help you. You have the information. You have, for the first time in your life, you have the right way to trade the markets. Now it's up to you is how you disseminate that and how you apply that to the chart. And that's an internal thing that I can't teach. I wish it was simple, like we could all maybe hire a hypnotist guy and we could all sit in the auditorium, we could walk around and go, you will be a 100-lot trader, or you will be a 1,000-lot trader, and snap his fingers and all of a sudden all that shit goes away. But listen, I've delved into this. I've done the research for my own personal behaviors. It goes way back beyond trading. It goes back to when you were little and how your parents treated you with money. If your dad gave you an allowance or if he just beat you and sent you to bed without your vegetables. That stuff has to do with how you trade, believe it or not. And that's what Kim was talking about with the marshmallows. The type of person you were as a kid. Were you patient? Could you wait for your setup? Could you wait for the second marshmallow? Those are the things that as a child determine how you're going to be as a trader. It's crazy, but it's the truth. Those are things that I can't help you with. You know what? There's a self-help section. I've read most of those books, but it is crazy, but it's true. If you ate the first marshmallow in that study, you might suck as a trader. If you waited for the second marshmallow, you have the patience to wait for a good setup for a second leg entry. So we can equate second marshmallow people are second leg traders. The people that ate the marshmallow immediately, they're first leg traders, and they keep banging their head against the wall frustrated. That's how that study relates to what we're talking about. And if you don't know the study quickly is, they offered a kid a marshmallow right now, one. They told him if he waits for 45 minutes, he could have 2 marshmallows. Delayed gratification or whatever. So, if you take 1 marshmallow now, you're an A or V trader. Right? Because you think you see the setup, bam, you're in. The people that can wait for the second marshmallow are the people that can wait for the second leg. It's the same type of analogy, so to speak, or same type of thing. So, I don't know how to help you with that stuff. I mean, we've tried. We brought some people in to try to help us, but you got to go on your own quest. You have the knowledge now. Think about this. You have the ability to master these markets, any market. The question is, you got to do some self-improvement on the stuff that happened to you as a child growing up. You got to work on that. If you work on those 2 elements, the world is yours. You could have whatever you dreamed you wanted, whatever you knew you deserved. It's yours now. So with that, I mean, I don't know, I got off on a tangent, but it's important stuff to know. Everybody goes through this. You know? Everybody, what happens is it gets, it can get carried away. Your ego can run away from you. Things can happen. Money's crazy. It makes you do crazy things. But keep everything in perspective. This teaching keeps me grounded. Seeing people turn the corner, having children, those things work for me. They keep it real, so to speak. Because it's crazy, right? It's crazy stuff to be able to know, to have the playbook of the market makers in your hand and know what these assholes are going to do from day to day and how to beat them. Yes, it's true. Your worst traits come out within you as a trader. You got to look in the mirror and handle that stuff. You got to handle your business. When is the best time of day to trade? By the way, Gloria, I'm proud of you. London Open and US Open. Okay? Remember the first 4 hours of the session? Maybe the last hour of Asia going into the first 3 or 4 hours of the session. U.S. session, around 8 o'clock, 8 to noon, 8 to 10, 10:30. See if the dealer makes a reversal. The idea is to not beat yourself up in front of the screen for 23 and a half hours, sleep 30 minutes and start over. The idea is to understand when the activities happen. Mid-session is usually subdued. As of late, it's been moving a little bit, but for the most part, the dealer makes his activity, false move session ending, false move session beginning, encompass gap time, and work for a couple hours. All right? What is the signal to know that you are now in a successful trade? When you put the order on and you're going, oh my God, oh my God, oh my God, the dealer will do something. And then at that instant, you know you got him. When the dealer shifts the zone in your favor, he snatches his zone away from higher level longs, lower level shorts, but you happen to be in the right direction. When he does that, the trade will be successful. At the worst, you'll scratch out, right? Because if he comes back, you got to at least scratch out. All right. What was the one move by the dealer that catches everyone off guard except this group? Straight rise or fall. Okay? We expect that. The straight rise or fall is when the dealer gets the hell out of there. He gets to get out of the area and drag those orders along with him that are going the wrong way. And he does that quickly. And he also, one of his tools to set up that trade is the margin call window, the margin call plugin on the platform. Are you still wondering what the heck you signed up for? Me too. Hopefully by now you should be like, absolutely not. All right, you have to say that, right? I'm right here. You can't say behind my back. All right. Okay, man. Good stuff. Okay, what I did was recorded some setups, sped them up faster than real time, and then recorded them again so the videos actually move faster. Okay? And I chose these two because these are difficult for people, so these are not the typical M&W formations. Well, I don't want to give away too much. Let's just watch it and see how it plays out, and we'll talk through it. All right, everyone can see okay, right? All right, I'm going to mute. I'll pause and comment. Yeah, there's no sound, man. We're just watching. All right. Steve Post is short. How many of you went short right now? As soon as you see a spike candle. I'm kidding. You better not be. Okay. What do we got? Somebody list for me. Yeah, evening star, good. All right, so what are we looking at? Let's go back from the beginning. Okay, some of you not sure, that's okay. All right, let's go through all the stuff. Asian range, less than 50 pips. Right? Reconfigure the last amount of activity over here. Is this stop hunt 25 to 50 pips? You can't measure it, it is. 25 to 50 pips higher. The dealer made 2 aggressive moves towards the high, extended the initial high of the day, 25 pips above. Okay? You got shark fin above water down here. We know that this is a counter trend trade. Price has been rising because there's the position of the 1 hour 50, 200 mayonnaise. Okay? So now, you can wait to see what he does, or you can take an entry here. All right? As soon as you decide to take your entry, some of you are waiting for second leg, I'm proud of you. Those of you that do that, I'm proud of you. You can take an entry here or wait. Okay? Shark fin, blood in the water. Okay, Charles said he wanted to already be in, so you get a half a marshmallow. You don't even get one marshmallow. Okay. All right, let's let it roll. Hate that I have to, when I switch the pen, I have to go back to make this roll. Okay. Okay, most important too, if you got in, then the line went away. If you got in, you need to start your time clock right now. Okay, those of you who took the entry here, you're up into a small profit. Cleared the spread, a few pips. Someone said, what's that green line? That's where I got in. Good job, Whitney. I'll talk about averages today. All right. I don't know if you guys could hear me for a second. It wasn't moving. All right, so here we go. That's the M formation. The second leg, right? This is a better entry. The reason why is that there's no drawdown. And once he makes this move, he ain't coming back. Because he made his second leg. He created the volatility and the fear of what direction he was going to be going by doing this stuff. He confused everybody. Right? Someone asked if the box is not greater than 50 pips, why redraw? Because I like to see where he vectors from. That's a tight consolidation range. Remember, he's messing with the breakout traders. Breakout traders probably drew something like this. Maybe he picked them up and just turned over. It's kind of crazy. If you traded this tight range as a breakout trader, he snagged you, snagged you, got you, and then got you again. If you traded that tight of a breakout range. Okay, so he vectored. He vectored again, hit the high, pulled back. Some of you got in here, that's okay. But what happened was you had a trade that was in profit. It pulled back. You had to endure a little drawdown. And if you moved your stop too early, you got yourself jammed up. Now, the evening star pattern or morning star pattern, this is the problem with it, is that in one bar, the dealer accomplishes like three things. He shifts the zone with the same bar that he used to make the second leg retracement, in essence. I mean, this is a good second leg, but a lot of times you'll get this structure and then he's gone. So what happens is understanding how the structure is set up, that the one bar comes back near the high and fails to take it out. He shifts the zone with the same bar. Right? He opens the spread and reaches above with the bar. He does, in 15 minutes, he does all the work that he would normally do in a typical M formation that might take over a couple hours. A traditional M, right? So that's what's a problem with this bar that a lot of people don't understand. So I chose this formation for you to understand all the activities of the dealer are taking place in one 15-minute element or 15-minute period. And that's that bar. Okay? So now, yeah, the dealer only got one marshmallow. He couldn't wait. He did it all in one bar or one marshmallow. Good job, Steve. Okay, so look. And Steve Post, I love you. I was just messing with you. Hope you're not mad. Okay, look. The Asian session did this, right? And then shifted down and did this. Because you could tell by here's the high, here's the low. I don't even have to see the box. I can tell you what it did. Alright? But I'm looking for a visible stop hunt 25 to 50 pips above or below the Asian range. But I like to see the aggressive move above the consolidation zone. Remember I told you if the box is blown out, let's say this box was 75. It just happened to be 50. But if the box is 75, then I don't give a shit about this stuff. I care about the last quarter to 1/3 of the box. How is the dealer handling it? He's handling it tight consolidation, attracting the breakout traders. Now, if he goes back like this, back to here and does this, I'm probably going to miss that trade because it's not a clean, visible stop hunt above the Asian range. I want a nice stop, aggressive move above the Asian range. And if I would have shorted here, I would have got jammed up. I would have got stopped out. See the difference? Because, oh, there's a vector and there's another candle. It looks good. He hasn't come back below. In the evening star formation, that's another thing I want to point out, is that the dealer rises above the Asian high, works it, and comes back below. And how long? 45 minutes. What did I tell you? It's about how they handle the high and the low. The dealer exploited the Asian high in one swipe. He hung around to form the pattern. But remember, this is I don't know if it's called the apex or whatever, the nadir. What the hell do you guys call that? This piece right here in the M is this bar. Is that hammer? Yes, Scott. Okay, that hammer, in essence, forms the nadir. Okay, so if you look at it in its purest form, the 3 bars forms an M. Okay? So that's what you're looking at. You're looking at, okay, what did he do? He went up, right? Remember, this is not what I learned. This to me is meaningless. This is the footprint that he left. Take this by the numbers. The dealer went, remember, 60 by 62. He went to 84. He pulled back to 72 or 78, 76, make it easy, right? He hit 84, pulled back to 76, went back up to 78 or 79 or 80, and then he corrected off of that number. He fell 15 to 20 pips off the high and started his run. That, to me, by the numbers, putting the numbers to these candles explains what he did. You understand? So, it's okay to enter here because he came back below the Asian high. He worked the number just in a 45-minute range in accordance with what I've explained to you by the numbers. The dealer took the Asian high, extended it by 25 pips to 84. He held out for 15 minutes, hit the stops to the low side, possibly opened the spread here. He opened the spread here, then faded off that number, came near it, failed to take it out, and then drifted off that number and closed back below the initial high of the day. Okay? But if you wait for a validated second leg, that's pretty too right there. If you wait for a validated second leg, then he comes in here and makes another pass. And notice all this work. Understand all this stuff. Look. Anybody that took the trade and put their stop outside the Asian range, a few pips, half of the bar, whatever the hell the reason people put stop losses, he comes back and he makes sure he gets them. Okay? And there's a good entry. If you took this entry, this is a no drawdown second leg trade. Because he shifted already in one bar, now he hits it again. He already starts his shift. And as you'll see, it plays out nicely. All right, let's watch the last couple of bars. See, there's your shift bar, man. So if you got in a blink of an eye, you went into profit. Yep, if you got in here, stop loss is above the second leg right here, 7 to 10 pips. Second leg trader, man, you ain't coming back. He ain't coming back. You got him. So if you grab second leg, you put your contracts on at the open, within 15 minutes you're in profit. And within 30 minutes, you almost hit your limit. You bagged your limit. There's your limit. That's a 30-minute trade. What's the difference? You took a trade that could have been 1, 2, 3, 4, 5, 6, 7, 8. Trade that could have been 2 hours. And listen, by trading standards, 2 hours is fine to be in profit. Remember, that's the time stamp. Okay, now, if you got in here and the dealer did this and you weren't stopped out, you shouldn't have been because your stop should be here. The dealer retraces in here and you identify this structure, clock starts over, reset. Okay? Now look at everything that's going on here at this point in time. There's your M formation. Good entry. 30 minutes out, you're in profit. You're up almost 40 pips. Stop goes from here. Stop is 10 pips above. Let's just say, counting the spread, 7 to 10, say 10. Okay, stop is here. Stop moves to break even on the second bar. You know the mayonnaise is coming into play. It's going to go into consolidation, so you take. All right? I chose this setup to show you guys because a perfect M is too easy. I want you to understand that in the pound crosses, the dealer uses railroad tracks, evening and morning stars, You'll see this type of pattern. Understand, I don't care about this pattern. I care about the numbers. Understand it by the numbers. What's going on? You don't always get this second leg luxury. That was a gift. But understand what he's done or what he's accomplished with the second leg. And if you took this entry, this should not scare you out of a trade. You got to at least wait the 15 minutes to see how it ends. And when it ends on a hammer, you're still gold. Because he closed back below, keep in mind the Asian range. Okay, is it critical that this candle closes inside the Asian range? No, it could lay right on top. But this is, when this does, you know you're good. Yes, Paul, absolutely. Paul brought up a good point. That if you took your entry here and you felt good, and when he issued the hammer second leg, you could have scaled in. So you could have took 10 lots on the first formation and 10 lots on the second, and when you limit it up, it would have been a nice day. Okay? All right, one more. Same thing. I'll be quiet for a couple minutes so there's going to be no sound. Let it play out and then we'll talk about it. Zen just went long. Okay. Let's look at it a little bit where we are. The dealer obviously spiked to the low. Grab a pen. Okay. What did he do here? He grabbed the breakouts, dragged them backwards, right? What is this piece right here called? So far, what is that? Yep, vector, outside structure. Yep, outside structure so far. We don't know if it's going to be a second leg element, but it's an outside structure right now. And he made his 3 passes towards the low. Don't be deterred by this shark fin right here because the bands were tight. There is no visible stop hunt above the box. The stop hunt has to come in here or here like it's doing. That's a true stop hunt. That's why this box needs to be 50 pips or less. The box needs to be 50 pips or less, and there needs to be a visible stop hunt above or below the blue box. Okay? All right, let it play out. Okay, by the numbers. Do you have an entry? Okay, by the numbers, right? Okay, the dealer made an outside structure to the low, 25 pips below the Asian initial low of the day, okay? He pulled back. He came in here. We watched him get within a few pips of the low. Draw a line on the low. We saw him come within a few pips of the low. Okay? Now, how long has he been working the low of the day? 1, 2, 3, 4, and a few minutes. 4 times 15, 1 hour. Okay? 4 bars after the low is established. About 1 hour, because you got to count for some time on here once the low was set. Okay, so by the numbers, look right here. There's your signal. You have your signal right there. Okay, if any of you entered here or here, you're okay. You're good. This is a very good entry because your stop loss can go in here. Okay? Let it play out. Okay, let's talk about this for a second. A close above the ketchup is a confirmed entry. Okay, so if you waited for that entry, you're okay. All right, if you got in here, that's okay. But what happens is this trade went into quick drawdown. Is the trade still good? The trade is valid as long as the low of the day is not violated. Okay? So if you took this trade, in the first 15 minutes you suffered a little heat. But the trade is still good as long as the LOD is not violated. Okay? But remember what they do. They pin the area and they work it. They're trying to induce people to go short. The only way to induce people to go short is to show things that represent a short trade. Because what happens is, if you're in a short trade, all of a sudden, because of the way the human mind works, you're validating everything that validates your decision. So, what you would say to yourself here is, all right, you took a short, right? Then you would go, look at that, railroad tracks to the downside, I'm good. Then it would tick around, you go, oh man, there's a short hammer, I'm still good. Then what happens? It makes another set of railroad tracks. You go, damn, double railroad tracks. I'm short, everything's showing short, I'm good. And the whole time, the dealer's going, nanny, nanny, boo-boo, stick your head in doo-doo, because he made the low, and he has not broken the low, and he's trading off that number. So any amount of people that are stuck here are not seeing a profit. So if they went in short in here, mentally, they're validating everything. They're going, oh, look at that. He's staying near the low. He made a couple railroad tracks, a hammer. Look at that. I'm good. Here comes a doji painting. Man, it's going to go. It's going to go. That's what people tell themselves, and that's the power of the mind. You want to be right, so you validate all the stuff that validates your decision, if that makes any sense. Right? If you took a short position, then mentally you think your bias was short. So in your head, you validate everything that's short. And that's what people do. Okay? So if you waited for the confirm entry, the dealer put a little heat on you. You had immediate drawdown in the first 15 minutes of the trade. But the trade is valid as long as the LOD holds. Now some of you are saying, thank you, Jesus. No, there's your shift bar. The dealer got the hell out of there. You're good to go. And you know the rest of the story. He's got a stutter at the 50. They always stutter at the moving averages. When the dealer shifts the zone, you know you're good. Okay, trade's still up, and there you go, baby. Expect a little stutter at the average, always. Orders coming in, people that are trading above or below stops, all that garbage. Okay? Stuttering at the average. Stuttering at the average. Hit the stops, rise. Okay, ADR is met, locks up red. Even though the levels are not visible on this trade, okay, I want you to observe something down here. Because I told you this before, if you can't always see the levels in price action because they're concealed within the 15-minute bar, look at the TDI. Let me grab a pen. See it? Now you see it? 1, 2. We're in level 3. Are we? Well, ADR has been met or exceeded. Okay, and that's usually part of the process for 3 levels of rise. Remember the little stutters here and the stutter here all within 1 or 2 bars. So if you go like this to match these pieces here, that would validate level 1, level 2, level 3. ADR is exceeded. Outside structure to the low, dealer holds the level for an hour or 2, shifts the zone, stutters at the 50, level 1, makes a burst to level 2, stutters at the 200, level 2, breaks, exceeds the ADR, we're into level 3, we got angle and separation outside the band. Expect a little further rise before he comes back. Okay, when the RSI line turns over, look for the exit. Okay, you should be limit up by now anyway. Yes, Danny, you should be out already or looking to get out. Watch the RSI and watch how the averages are. You got good angle and separation still. A lot of you all of a sudden became swing traders. You're like, oh, I'm not taking 30 pips. I converted. It'd be fun if it would go this fast, wouldn't it? In real time, it'd be great. Especially knowing what we know. We can come in, work about 30 minutes, and be done. All right, look at RSI rolling over. The RSI over here is starting to roll over now. Okay? And it's above the extreme resistance line. Price starting to roll over a little bit. Okay? The kind of thing that's hilarious to me is that I made this tape probably 6 months ago, about 6 months ago, right before the Orlando class. I never got a chance to show it. The class was too big. But what's crazy is this exact setup happened 2 nights ago on pound and euro. Go look at it. Outside structure. I just had this conversation with Ross. I don't know if he's in here or not. But that's the exact trade. The only difference is they shifted it over, concealed by the blue box. And then guess what? 2 weeks ago, same thing on a multi-session, GBP CHF. I took that trade. I showed it to you guys in the boot camp. Same thing, outside structure high. Dealer holds the level, comes near it a couple more times. He comes back in, fades below the 50, and the bottom fell out. Good for 50. And I hope seeing this in kind of real time puts it together, understand the mentality of what you should be looking for, not panicking. As long as the levels hold, the trade is still good. You know, Steve, I don't see any levels. This is your secondary look for your levels. your backup for your levels, because it's based on the closes and what price action's doing, and it makes the perfect